Well, it means everything. And, it makes perfect sense that China would do this. China has had plenty of reasons to do it in the past, but Biden and now Trump have given it even more reason. And not just China. The dollar's reserve status is basically responsible for our entire standard of living. I mean, our economy, our consumer-based credit economy rests on a foundation of the dollar's reserve status. Without it, we couldn't have this economy. Now, and so if we lose this, then the dollar's going to collapse. Prices in America are going to go through the roof. Consumer prices, much worse than anything we saw, under Biden. So the Chinese win, the rest of the world wins, particularly the emerging market wins, and the U.S. loses because the ride on the global gravy train comes to an end. What China should do is what we did initially, is back the RMB with gold. They should say that the RMB is better than the dollar because the dollar is backed by nothing and our currency is backed by gold. And they should do that and make it convertible. And then what they should do is they should sever the tie between the Hong Kong dollar and the U.S. dollar. And they should peg the Hong Kong dollar to the RMB and peg the RMB to gold. I mean, that's checkmate. The game is over. It means everything. And, it makes perfect sense that China would do this. China has had plenty of reasons to do it in the past, but Biden and now Trump have given it even more reason. And not just China. There are countries all around the world that really want to divest of dollars, not just because the dollar is, a flawed currency to hold, that we're going to keep printing dollars because of our massive debts. And so the holders of dollars are going to lose purchasing power the longer they hold them, but because of the political aspects, the ability of the United States to sanction whoever it wants by threatening to remove their access or take their reserves. And so, we've really pushed the world to a decision that they should have made on their own. But now it's happening. But most Americans do not understand the degree to which the dollar's reserve status is basically responsible for our entire standard of living. I mean, our economy, our consumer-based credit economy rests on a foundation of the dollar's reserve status. Without it, we couldn't have this economy. Now, in the long run, that would be a good thing. I mean, I think we have taken advantage and exploited the dollar's reserve status to live beyond our means and indulge ourselves.
Xi's announcement represents the formal declaration of economic war on dollar hegemony. SWIFT, Society for Worldwide Interbank Financial Telecommunication, is the Western-controlled payment messaging system that gives the US-EU ability to sanction and freeze assets globally. Creating an alternative Chinese-led system, CIAP's cross-border interbank payment system, likely expanded, removes that leverage entirely. Currency swaps allow bilateral trade without dollar intermediation. When Saudi Arabia accepts yuan for oil, the petrodollar system, foundation of dollar demand since 1970s, begins unraveling. This isn't gradual de-dollarization anymore. It's coordinated, announced, aggressive displacement. The significance: China controls the supply chains, has the manufacturing, holds production capacity. If they offer an alternative payment system plus commodity-backed currency stability, emerging markets will switch en masse to escape dollar weaponization.
The harder it's going to be to transition back to reality when that exorbitant privilege is revoked. Because what the world has allowed Americans to do is spend a lot of money, consume a lot more than we produce, borrow a lot more than we save. So we're able to have $1 trillion a year trade deficits, multi-trillion-dollar budget deficits. The reason we have this huge military force is because the dollar's reserve status has financed it. And so if we lose this, then the dollar's going to collapse. Prices in America are going to go through the roof. Consumer prices, much worse than anything we saw, under Biden, just sky-high prices. Interest rates, long-term interest rates are going to soar. And the whole consumer economy is going to collapse. We're going to have an economy built for consumer spending, but with nothing for consumers to buy. The shelves are going to be empty.
Schiff identifies the dual drivers forcing dollar divestment. 1. Economic. Dollar debasement through endless money printing erodes purchasing power of reserves, making it a terrible long-term store of value. 2. Political. Weaponization through sanctions creates existential risk that reserves can be frozen or confiscated arbitrarily. Russia's 300-by-plus demonstrated this. The key insight most Americans miss: reserve currency status isn't just financial prestige. It literally enables the consumption-based economy. Without global demand for dollars, forcing others to accumulate them for trade's reserves, America cannot run perpetual deficits while maintaining living standards. The consumer economy, credit access, cheap imports, massive military spending, all exist only because the world needs dollars. Remove that need, and the entire structure collapses. This isn't hyperbole, it's accounting. When dollar demand falls, dollar value falls, import costs explode, living standards crater.
Because we don't make any of this stuff, and we won't be able to afford to import it after the dollar collapses.
Do you think Mr. Trump is kind of pushing this over the edge without even kind of meaning to?
Well, he's poking a bear without even realizing who the bear is.
Right.
Trump keeps claiming that America has all the cards because we buy everything, we consume everything. He's got it backwards. We don't have any of the cards. It's the producers that are in control.
The term exorbitant privilege, coined by French finance minister Valéry Giscard d'Estaing in 1960s, captures the asymmetric advantage. America prints paper, the world provides goods. Every trade deficit dollar sent abroad returns as treasury purchases, financing consumption without production. This creates moral hazard. Why manufacture when you can print? The trade deficits, importing $1,000 more than exporting annually, would destroy any normal currency. Only reserve status makes it sustainable. Similarly, budget deficits adding trillions to national debt are financed by foreign central banks, required to hold treasuries for reserve diversification. The military empire spanning 800-plus bases globally costs $800 annually, impossible without reserve financing. Schiff acknowledges this must end eventually, but warns the longer the dependency, the more catastrophic the adjustment. An economy built for 50-plus years on consumption without production cannot pivot quickly. When privilege revokes, reality asserts itself violently.
They make all the stuff. Consuming it is just the benefit that you get after you produce stuff. The Chinese and the rest of the world are perfectly capable of consuming what they produce without us. But we cannot consume what is not produced. So the Chinese win, the rest of the world wins, particularly the emerging market wins, and the U.S. loses because the ride on the global gravy train comes to an end. We have to live within our means. And unfortunately, decades of outsourcing our manufacturing and hollowing out our industry have left us in a situation where we can't, we're not self-sufficient anymore. The rest of the world is. Right? All they have to do is buy what they produce, and that will happen when the dollar crashes. Because when the dollar crashes, what that does is that shifts purchasing power from America to the rest of the world. And so now products that were too expensive for the Chinese become a lot cheaper, and now they buy them. And products that were cheap in America now become very expensive, and so we don't buy them because we can't afford them anymore.
This is the zero-sum reality of reserve currency loss. Purchasing power is finite globally. When the dollar was strong in reserve, Americans commanded disproportionate share of global production, despite representing 4% of world population, consuming 25+ of resources. Dollar collapse reverses this. Chinese workers who make iPhones can suddenly afford them as yuan strengthens. American consumers who bought them can't as dollars weaken. The gravy train metaphor captures the free rider element. America consumed production it didn't earn through corresponding exports. Manufacturing outsourcing, which seemed brilliant when dollar was strong and imports were cheap, becomes catastrophic when currency weakens and domestic production capacity is gone. China and emerging markets become self-sufficient consumption loops. America becomes dependent importer without purchasing power. Products too expensive for Chinese. At old exchange rates become affordable. Products cheap in America become prohibitive. The purchasing power shift is mechanical, not ideological. Weaker currency means less claim on global production.
So in many ways, ever since the United States went off the gold standard and said, we don't need the gold standard, just trust us. We'll decide what everything is worth, and we'll print as much or as little as we need. And the rest of the world went along with it, saying, well, you know what? It's a pretty good system. Let's go ahead and use it. Nobody's getting hurt by it. But in the last, decade or so, everything seems to have changed. I think, by the way, do you know, and I think you mentioned this to Tucker, where it really was put on steroids was when the Ukraine war started and Europe and the United States went heavy into castigation of Russia. And Russia somehow survived that. And you tell me, maybe I don't know this business as well as you do, but I think the rest of the world may have recognized and said, oh, maybe we can do that too. Maybe we should do that because of the weaponization of the dollar.
Nixon closing the gold window in 1971 was history's greatest monetary gamble. Replace commodity money, gold, with fiat money, pure trust. The promise was, we'll be responsible. Federal Reserve would manage money supply prudently, maintaining value better than rigid gold standard. For decades, this worked tolerably, though inflation averaged 4% plus versus pre-1971's 1 to 2%. The world accepted it because dollar liquidity facilitated trade and U.S. economic dominance seemed permanent. The Ukraine-Russia sanctions in 2022 represented the inflection point. Freezing seizing $300 plus in Russian reserves demonstrated that dollar holdings aren't property, they're conditional permissions revocable at U.S. discretion. This destroyed the Trust Us Compact. If Russia's reserves, accumulated through legitimate oil sales, can vanish overnight for geopolitical reasons, no country's reserves are safe. China, India, Saudi Arabia watched and concluded, diversify away from assets that can be weaponized. The gold standard provided objective, apolitical settlement. No government could seize or devalue your gold through policy. Fiat dollars require trusting U.S. restraint, a trust now broken.
I criticized the Biden administration for that specific reason the minute it did that. Trump has made it worse, not only with threats to invade Greenland, which he's walked back, but also more threats of sanctions. But also, I think what made a big difference was when Trump ran for election this time, there was a lot of talk about getting our fiscal house in order. Elon Musk was going to come to Washington with Doge, and we were going to cut trillions of dollars out of the federal budget, and we were going to get a handle on the runaway debt. So there was some optimism that maybe, this would happen. Now, I never believed that. I was telling my clients and my audience that it was all BS. And of course, I was right, because they ran Elon Musk out of town. So very little was cut. But what did happen was the big, beautiful bill, which increased government spending, reduced taxes, and widened the deficits that were inherited from Biden. So Trump made the problem worse. But more important, he let the world know that there is no hope of America ever, getting a handle on this debt, because neither party wants to touch it with a 10-foot pole.
Trump's fiscal trajectory obliterated the last hope that America would address debt through spending restraint or growth. Campaign promises of Doge, Department of Government Efficiency, slashing trillions created optimism among foreign creditors that maybe, possibly, the U.S. would stabilize its fiscal house. Schiff's prescient skepticism, I told clients it was all BS, proved correct when Elon Musk's efforts were marginalized and the big, beautiful bill did the opposite: increase spending, cut taxes, widen deficits beyond Biden's already catastrophic baseline. The signal sent globally: both parties are fiscally reckless. There is no political coalition for restraint. The debt will never be addressed except through inflation default. This removed the last anchor of faith. Foreign central banks and sovereigns concluded, if America can't fix its finances, holding dollars is guaranteed wealth confiscation through debasement. Hence the massive gold accumulation by central banks, 1,000 plus tons annually, and private investors. Gold doesn't campaign on fiscal responsibility, then betray it. It simply exists, neutral, apolitical, finite.
And so the only choice is to get out. That's why the world has been buying gold. That's why central banks are buying gold. They want out of the dollar. And that's why China is looking to give the world an alternative. What China should do is what we did initially, is back the RMB with gold. They should say that the RMB is better than the dollar because the dollar is backed by nothing and our currency is backed by gold. And they should do that and make it convertible. And then what they should do is they should sever the tie between the Hong Kong dollar and the US dollar. And they should peg the Hong Kong dollar to the RMB and peg the RMB to gold. I mean, that's checkmate. The game is over. And, China has all the production. They've got all the factories. They've got all the exports. They've got the savings. They can have the reserve currency. Now, maybe they won't get the whole world, right? Maybe some countries will still hang on to the dollar for a while, but they will eat into our monopoly substantially. And that is going to be a huge problem for the United States.
Schiff outlines the nuclear option that ends dollar hegemony immediately: gold-backed yuan. This would mirror what made dollar dominant initially. Bretton Woods, 1944, established dollar as gold convertible at $35 per ounce while other currencies weren't. China has the gold, officially 2,000 tons, likely 10,000 plus, the production capacity, world's factory, the trade surpluses, savings, and the commodity access, Belt and Road partnerships. Backing the yuan with gold at fixed conversion rate, say 1,000 yuan equals 1 ounce gold, would make it instantly credible as reserve. Countries could hold yuan knowing they can convert to metal if needed, eliminating political debasement risk that plagues dollar-euro. Hong Kong severing its dollar peg and linking to gold-backed yuan would demonstrate China's confidence. The checkmate isn't hyperbole. Which reserve asset would you choose? A, fiat dollar losing 5% plus purchasing power annually with sanctions risk, or B, gold convertible yuan backed by world's largest manufacturer? The game is over because competitive advantage shifts entirely. Some countries might stay dollar political alliances, but economic logic demands gold-backed alternative.
Right. Well, it's closer to 39 trillion than 38 trillion. But the bigger problem is that's the tip of the debt iceberg. What we don't focus on are the unfunded liabilities. So Americans are expecting Social Security checks. People who work for the government are expecting pensions. The government has guaranteed, a lot of pensions, bank accounts, student loans. Right, the government is on the hook for hundreds of trillions, and so these are actual liabilities that if the government were a private company, it would have to recognize them, and have reserves, a contingency plan.
Right.
But the U.S. government just assumes that none of those contingent liabilities exist. So we are in debt to a much greater degree
And
than anybody believes, right? Because the people who are waiting for Social Security, they think they're owed that money, right? But the government doesn't have, the trust funds don't have the money. So it's a liability to the people, but it's not part of the national debt. The national debt just covers outstanding U.S. treasuries. That's it. It doesn't cover any of the mortgage-backed securities that the U.S. government guarantees, right? Why aren't they included? Right? So it's a lie to say we only have 39 trillion in debt. We have much more than that.
So if I were a regular company, just to finish up your enthymime here, if I were a regular company and I owed a lot of money to a lot of people and I didn't have it in my reserves, I would not be able to just make it up out of thin air and continue to pay it. But isn't that exactly what our government is doing?
Yeah, if a private company reported its a balance sheet the way the U.S. government did, they'd lock them up for fraud, right? I mean, so you can't do that. And yeah, I mean, we're running a giant Ponzi scheme. Bernie Madoff had that part right. You remember?
This is the hidden catastrophe. $39 official debt is microscopic compared to unfunded liabilities exceeding 100 times to $200 depending on actuarial assumptions. Social Security alone faces $21 plus shortfall, benefits promised minus payroll taxes projected. Medicare adds $50. Government pensions, FDIC insurance, student loan guarantees, mortgage-backed securities, state bailout expectations, all real obligations excluded from national debt. Accounting. If private corporation used same accounting, ignoring contingent liabilities, executives would face fraud charges. The Ponzi structure. Current retirees paid from current workers' payroll taxes, not from saved reserves. When demographics invert, fewer workers per retiree, system collapses unless benefits cut or taxes explode. Madoff's comparison is apt. He ran Ponzi paying early investors with later investors' money. Social Security does identical thing but legally. The key difference, Madoff couldn't print money when scheme failed. U.S. government can, but printing to cover unfunded liabilities means hyperinflation. Foreign creditors understand this math, hence gold accumulation. When you realize official debt is 1/5 of true obligations, dollar confidence becomes irrational.
We don't have enough. I mean, maybe, I don't know, 40,000. I don't know where gold would have to be for it to be adequate. But it's not going to happen. We're not going to be able to repay the debt. We're going to either default on it or we're going to inflate it away. That's what gold is telling you. And, Jerome Powell may deny that gold's move represents a loss of confidence in the Fed and the dollar, but that's exactly what it represents. It's not an accident that this is happening when you have Fed independence in jeopardy. Not that it was ever really independent, but at least there was a pretense. And now they're trying to drop the pretense completely and allow the president to control the Fed. And so, yes, people don't want dollars and they're moving to gold. In fact, I think the recent sharp decline in gold, I think that was orchestrated by the White House. I think that they were scared of what was happening. And so they coordinated this, this short selling raid to coincide with a false narrative, that is perpetuated by the media based probably off of talking points fed to them by the Trump administration, that Walsh is some kind of unexpected pick that is an inflation hawk that is going to be tougher than Powell, less likely to cut rates, in fact, may even come in hot and raise rates right away and clamp down on money supply. I don't believe any of this.
Central bank gold buying accelerated to record levels, 1,000 plus tons annually, precisely because sophisticated institutions recognize the unfunded liabilities math and dollar's structural doom. When Turkey, China, India, Poland, Singapore, UAE all simultaneously accumulate gold, It's not coincidence. It's coordinated recognition that fiat reserves will be inflated away. Gold offers what no fiat can: finite supply. Can't print more. No counterparty risk, not someone's liability. Apolitical, can't be sanctioned. History as money, 5,000 plus years. The want out of dollar urgency reflects understanding that staying in means wealth confiscation, either through A, inflation eroding purchasing power, or B, sanctions freezes eliminating access. Gold solves both. For individuals, same logic applies. Holding dollars while government runs Ponzi scheme with unfunded liabilities is volunteering for impoverishment. Gold doesn't prevent dollar collapse, but it provides exit before collapse.
The people who made money in Bitcoin are the ones that bought it a long time ago. And the reason they made money is because new people came in and bought it recently at a much higher price. Those buyers are going to be the bag holders. They've lost a lot of money. Whether they realize it or not, they're holding nothing. They're holding air. The bottom can drop out of Bitcoin on any day. And if you're stuck holding it, right, you know, and even if Bitcoin doesn't go to zero, or let's say Bitcoin actually finds some stability, maybe at 1,000 a Bitcoin, I don't know, but let's just
whatever
say,
it is, yeah, back to 100,000.
Bought it at 100,000, or you buy it now at 75,000, whatever, 70,000, 68,000, whatever it is. If it goes to 1,000, you don't even care at that point if it goes to zero. You've already lost most of your money, 99% of your money. So what you got left, you know, is trivial. So people are just, you know, going to lose a lot of money that are getting suckered in to this, you know, this pyramid, and CNBC is a major factor in helping to deceive their audience and get them to buy so their advertisers can sell.
This is the harsh arithmetic. Americans consume $110 more than they produce annually. That overconsumption is financed by reserve currency privilege. Foreigners accumulate dollars, Americans accumulate goods. When privilege ends, the gap must close. Living within our means matching consumption to production. For a nation that outsourced manufacturing for decades, domestic production is far below current consumption. The adjustment mechanisms are brutal. 1. Unemployment rises as recession hits. Can't afford imports, domestic production insufficient. 2. Inflation spikes as weaker dollar makes all imports expensive. We import 40% plus of goods consumed. 3. Real wages fall. Unemployment suppresses wages while inflation raises costs. The radical reduction isn't political rhetoric, it's mathematical certainty. From current 60K median household consumption to perhaps 40K equivalent purchasing power. This is why Schiff's warnings, though repetitive for years, are deadly serious. Most Americans have no mental model for living standards falling 30 to 40%. They think recession means temporary job losses. This is structural, permanent reversion to productivity matching consumption. No reserve privilege, no overconsumption, lower living standards. Period.